Hi, my name is Sifiso Nkambule. I'm an assistant portfolio manager at Efficient Private Clients. The US equity market was surprisingly strong in the first half of the year. The Nasdaq opened the first quarter 20% strong and added another 15% in the second quarter. The S&P also added 7% in the first quarter, adding a subsequent 8% in the second quarter. However, that trend was broken in the third quarter, with both the S&P and the Nasdaq closing 3% lower. The strong first half performance can largely be attributable to three main factors. Firstly, energy prices were falling up until the end of the first half. This was quite constructive for US disposable incomes. Secondly, the wealth effect coming from a strong property market in the US. And finally, liquidity did not decline as much as it was expected. The collapse of SVB Bank in the first quarter of the year resulted in the Fed's balance sheet expanding and was ironically positive for the equity markets. The fourth quarter of the year is expected to be quite volatile. This is due to the fact that the aforementioned tailwinds are now looking like they're starting to become headwinds. For example, firstly, oil prices are now elevated by 30% for the third quarter, and this is in conjunction with the resumption of student debt repayments. As a result, this is expected to become a big negative for consumer disposable incomes. Secondly, the wealth effect also looks quite questionable as it stands. Property prices in the US have started to decline, with about 6% of listed properties having already reduced their initial asking prices. And then finally, the draw of liquidity from the system, with the impact starting to be felt in Q4 and into 2024. This is due to the fact that the Fed balance sheet has now started to contract and is about 4% lower than the pre-SVB collapse period. Sentiment around the European market should remain fairly weak. This is due to the fact that Europe's largest economy, namely Germany, has entered into a technical recession. And then secondly, the issues around energy security. In 2022, Europe was able to avert an energy crisis due to the fact that China was in hard lockdown, and some of the inventory that was supposed to end up in Chinese shores were rerouted towards Europe. However, that has now turned, and Europe is now again competing with China for LNG volumes. In addition, in 2022, Europe had a warmer than expected winter, and it remains to be seen whether, if the winters are colder than what they were in the previous year, as well as China competing for same LNG volumes, whether Europe will be able to avert an energy crisis in 2023. The local markets had a difficult third quarter. The JSE All Share declined by about 4.5% to close the end of September down -1%, effectively erasing all gains made during the year. The main contributors to this performance is largely sentiment around the Chinese economy, where the property market is a huge demand factor for commodities, and the negative view around the property market resulted in commodity prices becoming weaker, and as a result, a sell-off in the JSE listed mining stocks. Secondly, the stronger dollar actually weighed heavily on commodity prices. Gold fell by about 3.5% during the quarter, while platinum struggled to recover the 9% losses it made in the second quarter. Thirdly, load shedding impacted our local retailers. In a trading statement provided by Mr. Price in June, they attributed a cost of around R1 billion due to load shedding. The return of load shedding in September had a big negative effect on returns on the retail sector.